Are we live? Are we live? Let's see.
Live.
We're live. Retweeted. Are we in it? See. Oh, Decontrol is live. Perfect. Okay, sick. All right. Hello, everyone. Sorry we're a little late here. 10 minutes behind. No big deal. Welcome to ETH Van at Decontrol. Here every Thursday. We're going to be actually not as Thursdays as we normally are, just because we've got the big move coming. As you might see some boxes in the background here, we're starting to plan for that big move. We are going to still be here probably till the end of April is kind of the plan. And then we're, with a whim and a prayer here, we are hoping that we are going to be headed over to a new spot on Water Street. That's kind of what we're targeting right now. So we'll see. We'll see how this all plans out, but we'll keep everybody posted. But looking relatively promising.
Do we need anything from these fine members of the audience to help?
So at some point, we will need a few arms and legs combined together to help us pack shit up and move stuff. Andrew was kind of lining up some days we were thinking about doing this. So next week, potentially, maybe even as soon as next week. So yeah, we're just going to need to start packing stuff. We're going to try and keep this area open just because we might be able to host another couple events before we pack it up. But yeah. Regardless, would trying to keep this whole thing alive here. We actually had some feedback earlier tonight saying, hey, we got to make sure this community doesn't pack it up. We need to make sure this stays alive. So yeah, thank you for that comment, because yeah, that's how we feel. We want to make sure this place, this community, this vibe has a place to hang out, has a place to congregate, and who knows, maybe now we go above ground and maybe this is a place that you could work from too, because we are planning to have it as kind of a co-working area as well. Having more of a a membership where you could get involved and actually want to hang out instead of it just being and actually work from it and spend some time during the day when it's sunny out. It might be nice to be in a place that has windows. Sounds like a pretty nice idea. So anyway, we are working towards that. And yeah, just please reach out, keep in touch, just kind of follow our channels, and we'll be putting out some APBs here very soon as far as help. So much or any help is much appreciated. Yeah, thank you. Thank you. We've got... thank you very much, sir. Look at this. We got the pizzas from Ignite. Amazing. Appreciate it. Okay. Yeah, and then as far as events and stuff, I think like we've got the regular things that we're doing here. The ETH Global event, Andrew.
Next Friday.
Next Friday. What do we got? Hang on. Hand the man a microphone. Where's the pink one right here? This one. Right here. There. Tell us a little bit more about that. Hold it for 2 seconds.
Hello, everyone. Yes, this next Friday on the 27th, there's a free event over at Global Relay right by the Steam Clock. It's a crypto happy hour. Just come hang out. It's from 6 o'clock to like 9 o'clock after party here. We're going to be showcasing Vancouver founders. So if you guys want to see all the like cool founders here in Vancouver, I have, I think, like 8 or 9 people lined up. If you are a founder and you would like to speak just for like a minute or two, just kind of introduce yourself, showcase the cool stuff happening in Vancouver, let me know. I can get you added to the speaking side. But otherwise, there's going to be food, there's going to be drinks, and it's going to be a good time. So there's a Luma event. It should be on all of the different channels. If you don't have it, let me know, and I will send the invite to you. Yes, happy hour next week. Next Friday. So not tomorrow, a week from now.
Sick. All right, so yeah, please, everybody here and at home, the folks at home, make sure you try and sign up for that. Try and post some links. We'll have that on our Twitter as well. So just make sure you're keeping an eye out for that. And yeah, just getting ready for the big move too. So yeah, tonight we have our local... you've been doing a lot of talks here lately, so I was going to say like the local presenter here now at this point here. But hey, we've got Christian again here. Going to tell us about DeFi 201. Not 101, but 201. Doesn't it go like 102?
It can, yeah.
It can.
It's a little arbitrary.
Oh, okay.
Yeah.
I was not in academia, so...
Well, yeah, so this is not 102, it's 201. They're very
201,
they're very different.
Very different. Yeah, I see, like, I don't even know what we're doing, but... Anyways. There is a PO app as well for the talk tonight. So if you have the PO app, just open it up and scan for POAP. And it might even tell you as soon as you open it up, there's like a little notification that comes at the top. But mint that. There's not very many POAPs left for decontrol. There's also a decontrol POAP as well. So if you have the app, I highly recommend opening it. If you don't know what that is, go to poap.xyz. And POAP is also starting to kind of make some changes as well. So these are some of the last ones that are going to be available. I'd recommend getting.
Very rare.
Rare POAPs. All right. Take it away, Christian.
I will. How's my audio?
Audio. I might jack it up a little bit more here.
You're looking a lot.
If anybody has questions, make sure that you. Well, not that one. The other one. If anyone has questions, make sure you grab a microphone.
Hello. Yeah, that looks pretty good. Okay, hey everybody. I'm Christian. I'm gonna talk about DeFi. Called it DeFi 201. I feel like I've done like DeFi 101 a bunch of times, and like kind of bored of talking about that. I wanted to do something a little different. So as with an actual 201, I'll assume that a year ago you learned all the basics, and I'll briefly recap some important things. And those two things are DeFi properties and DeFi primitives, and then that helps make everything else make more sense. But I'll just go over them pretty quickly, and then I'm going to talk about some actual applications of DeFi that are seeing like real adoption today. There's a long road to get here, but there's actually apps handling like trillions of dollars on chain, so it's really cool. Agenda. I'm going to do a DeFi 101 recap for anyone who wasn't paying attention last semester. And then the three things I'm going to talk about are perpetual futures, prediction markets, and neobanks, as I see as like three of the biggest like emerging applications of DeFi in the real world. And Superform is a project that I'm working on, which is a neobank. So as an expert on the subject, I'm going to spend some time diving into that as well. And I'll even show you what the app looks like. Anytime you have a question, feel free to ask, but also we'll do. Okay, properties of DeFi. So those of you who aren't aware, DeFi is financial activity on blockchains. And by doing finance on blockchains, we inherit the properties of blockchains, which are these things here. So, in finance, what do I want to do? I want to send money to somebody. I want to pay for something. I want to borrow money. I want to lend money and earn interest. I want to trade assets. All these things we can do on a blockchain with cryptocurrency, but we have these properties that we don't have in traditional financial markets typically. So permissionless, anybody can participate as long as you have an internet connection. You can participate in DeFi. It's composable. So because this is all built with software, we've actually have the ability to do essentially anything with financial instruments, and then also kind of stack them together, if you will. So it's very like plug and play, almost like Lego blocks, like financial Lego blocks you can stick together to build cool things. And the reason that these applications I'll talk about in a bit even work is because of the composability of DeFi. Transparent. Blockchains often are like public ledgers, so anybody can look at a blockchain and see the entire history of all transactions ever. They can see your balance. So in DeFi, everything is public and transparent, which may be good and may be bad in some ways, but definitely an improvement over the opacity of traditional finance. Non-custodial is a big one. When you have money in the bank, you have like an IOU from the bank, right? Like the bank promises they'll give you their money back, and usually they will in this part of the world. There's some places in the world that aren't so lucky. They don't have like trusted financial institutions and infrastructure. That means they don't know if they put their money in the bank if they'll be able to access it tomorrow, or they don't know if their money will be hyperinflated away, or various other things that happen to billions of people in the world that don't have access to trusted financial infrastructure. So non-custody means I can have my own money. So as long as I have like the key to my account, nobody can ever take my money away from me. There's some caveats there with like popular stable coins like that, but generally you can know that if I have money in my crypto wallet, nobody can stop me from spending it. Nobody can ever take it away from me. Nobody can say no when I try to do something with it. And that is like probably the most important property of all of them, I'd say. 24/7 is a big one. The stock market closes at like, it's like 3:30 p.m. or whatever on a Monday to Friday. So in crypto, you can, all right, maybe just mute all your things going on over there. 24/7, so not just like 9 to 3, Monday to Friday, you know, whatever. It's you can trade oil futures on the weekend, right? Programmable is like kind of like composable, but you know, like I said before, it's software based. So anything you can imagine, you can do in DeFi. In traditional finance, honestly, like they've gotten pretty creative and innovative with some of the financial instruments, sometimes to the detriment of the entire financial system. But the things you can do in DeFi are like, because it's all programmable, global, kind of like permissionless, but like there's no, at least on the blockchain level, there's no restrictions on using this technology anywhere in the world to access finance. And interoperable is also kind of like composable, right? All these different applications really easily work together, which is not something you can say in finance. Again, things just kind of plug and play, and it's really easy to take multiple applications and build something else on top of that. With all of those properties, we can build some cool things. These are DeFi primitives, so these are like lowest level of the application stack, I would say. Once we get above like blockchains and smart contracts, these are the things you actually build. So a decentralized exchange is just a way to trade assets like peer-to-peer, meaning there's no intermediary in the middle facilitating the transaction. There's a protocol and code that's defining how these trades occur. So we typically have a liquidity pool, which is just a bucket of money. Typically there's 2 different assets in it, and you can permissionlessly trade between these 2 assets and peer-to-peer. So somebody else is like providing this liquidity. They're putting their money in the pool to facilitate other people exchanging their assets with each other. We have lending and borrowing protocols. So this is like I can lend money to somebody else. Again, it's peer-to-peer. I put my money in a big pool of money, and then other people can borrow that, and they pay me interest. Or collectively, they pay all the borrowers, pay all the lenders interest. And again, this is facilitated with smart contracts. Any like yield aggregators and optimizers kind of take some of these previous concepts and try to build on top of them. A lot of finance is like trying to make money. So with yield aggregators and optimizers, we kind of take all of these opportunities to earn yield or interest, and we consolidate them either into one application or one like financial product that is doing some sort of automation. An example could be, if I deposit into some arbitrary like investment instrument, and I'll earn some rewards or interest for doing so, then this optimizer can like claim these rewards and sell them for some other asset and like invest in the strategy. Just an example. These like automations things to make it easy to earn interest, and because of the composability, we can kind of run these automate yield earning. Vaults is kind of like the next level of that. It's like a DeFi structured product where there's some strategy that the vault is undertaking. You put your money in the vault, and a bunch of people put their money in the vault, which again is just a permissionless piece of software that has certain defined rules. And you put your money in there, and then the vault automatically puts the money somewhere else to earn interest, and then returns that interest to the depositors. Lots of different kinds of vaults. I'll talk about vaults in a bit. A lot of vault stuff at Superform. A few more things. Stable coins are cryptocurrencies that are pegged 1-to-1, typically with the US dollar or other currencies. This is because crypto assets are like really volatile, and to do like regular finance, we need a stable unit of count to transact generally. So stablecoin is popular. The majority of like DeFi transactions have a stablecoin involved. And bridges are to send money between blockchains. Blockchains are like siloed ecosystems that can't communicate with other blockchains or the external world. So if we want to transfer value between blockchains, we use a bridge, which is ideally like a trusted protocol for sending value, communicating between blockchains. We might want to do that because there's a bunch of different blockchains. Some of them are like purpose-built or good for different applications, and we want to be able to easily move our money between these ecosystems to find good investment opportunities or use certain apps and things like that. And oracles are kind of similar. It's the same problem that blockchains are siloed and can't communicate with the outside world, and they also can't get information from the outside world into a blockchain. So an oracle is like some sort of like trusted data provider, if you will, or not trusted necessarily. You're trusting ideally a decentralized network of participants to provide you accurate data that might be like, most typically it's like the price of an asset, but it could be like weather data, for example. And how do we get this external data on chain so that we can do further operations with it? That's DeFi 101. Any questions before talking about applications beyond the primitives? Oh, I copied that slide. Okay, so from primitives to products, we're going to look at these three things: perpetual futures, prediction markets, and neobanks. And you can just kind of see that some of these primitives are used to like build up these applications. And I will dive into each of them. Starting with perpetual futures. For those of you who don't know, what is a futures contract? Well, here's a nice definition here from some official source. I can't remember exactly where I got it from, but it's a legal agreement to buy or sell a specific asset. Could be a commodity like gold, silver, rice. Could be a currency. Could be a stock, and a predetermined price and a specified future date. So what that means is, say I will have a contract that says I can either buy or like sell these contracts. There might be a futures contract that's like, just for example, 1,000 pounds of rice at like $3 per pound, and I agree like buy that in 2 months from now. So maybe think of an example here. What you're trying to do with these instruments is either speculate and like have more leverage on your position in the market, or you're trying to actually do the opposite and hedge against price volatility. So this might be like I'm a farmer and I have a crop that I'm growing, and I'm worried about like some inclement weather event like wiping out my crop and like destroying my livelihood. So I could have I can hedge that risk with futures contracts, and then I can also like lever up, right? Like, say gold is trading at $4,000 right now, and I think that in the future gold's going to be worth $5,000. So what I can do is I can enter into a futures agreement which says in a month from now I will purchase a bunch of gold for $4,000 per unit. And now in the future, say I'm right and gold's $5,000, on the expiration date of this contract, I will execute the agreement that I entered into, and I'll purchase a bunch of gold for $4,000, but now gold's worth $5,000. So I can actually sell the gold if I wanted for $5,000, and I make a profit. It's an example of something you can do with futures. You might have heard of options as well. Options are kind of similar, but you have the option. So you don't have to execute the agreement that you entered into. In a futures contract, you do. And you actually have to take physical settlement as well. So if you're doing like oil futures and oil, you like hold this contract to expiry, then actually someone's going to come to your door with like a giant barrel, a bunch of oil barrels, and you have to like with that. So, kind of fun stuff. Anyway, that's some context on futures, and that's hopefully makes perpetual futures make more sense. You can imagine there's a lot of like inconvenience there, like have to worry about expiry dates and physical settlement. And I don't care about that oftentimes. I'm just trying to speculate and gamble. I think the price of this asset is going to go up or down. And the most pure way, I think, to speculate on the price of an asset is to use a perpetual future. So there's no expiry, there's no settlement. And what we have is a funding mechanism to keep the price anchored to spot price. Spot price being like the price of the live traded asset. So a future may deviate from the price of the actual of the spot price. So there might be like a premium or a discount when the futures price versus the spot price based on like certain market dynamics. And when we have an expiry date, the value of the future will always trend towards the spot price, and on expiry they will be equal. But when we don't have an expiry date, how do we keep the futures price like in check? How do we make sure it's still tied to reality? So we have this funding rate mechanism. Basically, there's two ways you can trade a future contract. You can be long or you can be short. If I'm long, that means I'm buying. I think the price is going to go up. If I'm short, I'm selling. I think the price is going to go down. And there's typically there's going to be a balance of people who are long and people who are short. Now, if ideally the futures price is the same as the spot price, if the futures price is above the spot price, so it's in our gold case, right? Spot was like 4,000, and say like the futures price is 5,000. That's a little extreme, but in this case, futures is like way above the spot price, and to get that back into alignment, we need people to sell the futures contract, because if you sell an asset, the price of the asset goes down. So if I incentivize people to sell, then I can get that price back to the $4,000 that it is supposed to be. So what we do is then, the funding rate is, if I'm long, I actually have to pay a fee to people who are short, because we want to incentivize the people who are short to bring the market back into alignment. So every hour, I'll have to pay some fee if I'm long. If I think the price is going to go up, I pay that fee to people on the opposite side of the trade. And that fee is higher the more the price deviates from the spot price. The opposite is true as well. If the futures price is below the spot price, if spot is 4,000, 3,000, shorts will pay longs, because we need people to buy to push the price back to spot price. That may be more helpful if I had a diagram, but hopefully that makes some sense. You don't need to understand it necessarily to get the rest of it, but if you're interested, that's how funding rates work, and that's why we can have this contract that lets us speculate purely on the price and direction of an asset without having to worry about expiry dates and things like that. When we have this mechanism on chain, which is like perpetual futures like technically exist outside of crypto, but crypto is what really popularized them. And the majority of like perpetual futures trading is involving crypto. We have it on chain. We inherit these DeFi properties. We get this 24/7 trading. We get no KYC. So most trading venues in traditional finance will require you to provide your identity, give them like your proof of address and your ID and all these things. With on-chain perpetual futures, you don't have to do that, and it's globally accessible. So anybody, anywhere, with any time, with an internet connection, can trade assets. And what's happening under the hood here, I'll show you in a sec like an example of what this looks like. But typically we have a like order book. So we have a bunch of people who are putting up orders, and it's like, oh, I will buy at this price, or I will sell at this price. And the market price becomes somewhere in between the highest buy price and the lowest sell price. And that's kind of where people are trading the asset at. And then we have like an order book is just like a collection of these orders that determines, number one, what is the market price, and number two, if I buy or I sell, like what price does that get executed against? And if there's a bunch of people who are willing to sell me something at $4,000, then that's the price it executes at. But if there's not only a few people willing to sell me at 4,000 and other people, I need 4,500 or whatever, now I get a worse price because that's the way the order book is currently set up. We have this concept of oracles as well. So we have that spot price where we're trying to use this funding rate mechanism to keep futures in line with spot. What is spot? Like, how do we determine what that is? Where does that come from? So we have an oracle, which is a price feed. Typically, it comes from like a centralized exchange. Could come from elsewhere. Actually, recently, we'll look at Hyperliquid in a second. Hyperliquid now is going to have S&P 500 futures, which is using the official, like they're actually working with the S&P 500, official real one, to provide that like pricing data. So it's not like that's who you're trusting to provide the price of that market. But generally, you're looking at like Bitcoin will use like the Binance spot price for the oracle. And this oracle is just like what price are we using to determine what the actual value of this asset is at a given time, and also importantly for like liquidation, what price are we marking that against? So common thing you'll do in perpetual futures is take on leverage. All derivatives really gamble, but if I'm taking on leverage, means like I only need to put up like $1,000 and I can actually make a bet of $10,000. But if my position decreases in value by $1,000, that's my margin or collateral that I put up for the trade, and I will get liquidated, or all my money will disappear. So we use that that like pricing is important for liquidation as well. And HLP, I actually didn't talk about Hyperliquid yet, but when we have on-chain perpetual futures, we can actually have cool like automated vault products that can like counter trade the users and like provide liquidity to the exchange. So in Hyperliquid, actually the HLP is this like community-owned vault that a bunch of people like put their USDC in there, and then it actually takes positions, which are often like counter trading users on the exchange, but generally it's like automated to have this like trading strategy that's net profitable, assuming traders lose money over time. This is like fully automated on chain. You can verify the strategies that it's running, and everything exists because we have this like transparent blockchain. So this is like a really recent article from the Wall Street Journal, and you can see it says hot crypto trade is 24/7 oil future, and then in the middle bottom there, U.S. residents aren't able to access Hyperliquid. So we're talking about Hyperliquid. Hyperliquid is the most popular perpetuals exchange on chain, and we'll look at what it looks like in a minute. But this is like a signal of this being a mainstream adoption moment for Hyperliquid. They're talking about it in the Wall Street, talk about it on all these traditional financial outlets. This is doing billions of dollars in a day, and it's really started to get popular. Recently, they have introduced commodities perpetual futures. So when silver was going crazy not too long ago, Hyperliquid started to get noticed for its ability to trade, permissionless, global 24/7 commodities. Specifically, so like silver was big at the time, and now with the war going on in the Middle East, we have a lot of people speculating on oil, and often certain like activities will occur on the weekends or after hours, or like Trump might say something, at 5 p.m. on a Friday, and the markets are closed then. And now you have the ability to actually trade this commodity anytime, anywhere, using Hyperliquid, unless you're in the United States. So the permissionlessness does not extend to front-end user interfaces. But this is just at like this is why I decided to talk about perpetual futures and talking about like real world DeFi applications, because this is like hot right now. People are speculating 24/7 on oil futures using Hyperliquid, billions in volume, and it's making the Wall Street front page, I think. Another little bullish chart here. Can you read that? Yeah, not bad. So this is DeFi Llama. It's a really good website for like DeFi information. It's free. It's got like so much data. It's like the go-to resource for something like this. And this is the Hyperliquid like volume chart, weekly bars. So you can see that lately it's been doing multiple billions in volume per week, even in the looks like the summer and the fall last year, getting up to over $100 billion of volume in a week. And then you can see on the left side the overall metrics there. So in the last 30 days, it's done $187 billion in volume. Even in the last 24 hours, 8.5 billion, and lifetime it's done $4 trillion in volume, which is just ginormous for a crypto application historically. So through mainstream adoption, and I want to show you what Hyperliquid looks like. Here's Hyperliquid. Okay, so here's like the Bitcoin chart. If you're familiar, like you don't have to be familiar with how to read a chart, but like up is price goes up, down means price goes down. This is volume. This is the order book I was talking about before. So you can see there's like some collectively all the market participants are wanting to buy 10 Bitcoins, 11 Bitcoins at this price, and then there's 2.8 Bitcoin at this price, 1.2 Bitcoin at this price. Other side, I'm willing to sell this many Bitcoin at this price, and so on. And therefore, the market price is going to be around in between these two values. You can see here this mark price. We have the Oracle price. So this is likely the Binance spot price we're pulling in here, and that's like our reference price. We have the funding here. So the hourly rate at which longs pay shorts, or if negative shorts pay longs. So because this is positive, longs are paying shorts. So every hour, if I'm long, I pay this much percentage, which annualizes 11% to everybody who's short collectively, to try to get the price in line with the keep the market functioning, things in check with. And the cool thing here is that I can just like trade. So I just have like a wallet that I set up. You can also create an account with an email, but I can just do things. I don't have to. I never signed up for this service. I never made an account. I never gave anybody any piece of information about myself, besides what they might be scraping from me. But like I never did a KYC or gave them utility bill or anything like that. I don't have any money on here. I do. Oh, I actually could. So yeah, so look, I could just I have money, and I could literally just like place an order right now, and I have a long order placed. Oh, I'm already executed. Okay, so look, I've already lost 2 cents. Anyway, it's that easy. Look, I'm like speculating on the price of Bitcoin, and all I needed was a crypto wallet and an internet connection, and obviously some way to like get stable coins. But then we have is this the one? Yes, so. Okay, so this is my oil futures. So right now, it's a Thursday at 7 p.m. on the West Coast. Markets have been closed for a long time, but there's people actively trading this market, and I could too. I think oil is going to go up before tomorrow morning, or I think there's going to be some sort of good news coming out of the Middle East, meaning that the supply chain issues affecting the oil price are becoming less of a concern. So I'm actually going to short oil because I think that the price of oil is going to go down before like the market's open tomorrow. I do that. I actually can't because I need at least $10. I'm too poor to trade right now. But that's the general idea. The important point is that this is an application doing billions of dollars in volume per day being mentioned by mainstream financial media outlets. And I can do things I can't do in traditional finance. I can do them very well, and I don't need to provide my identity to anybody. I don't need to ask permission to the platform. No restriction. I think that's pretty cool. On. Now I want to talk about prediction markets. This is not a very good slide, but everything you need to know about prediction markets, I break it down a little bit here. But essentially, it's kind of like trading, but instead of just speculating on the price of an asset, I can speculate on any future outcome almost. And again, because we are building these prediction markets on crypto rails, we inherit things like open participation, transparency, composability, and I'll just skip on to some more digestible things. So what do we have? There's going to be some market, some outcome with a yes or a no resolution, or a binary resolution. Really popular one was the U.S. Presidential election. So Trump or Kamala, right? Or it might be, will the U.S. invade Iran before March 2025, right? Or 2026. So there's going to be a yes or a no that I can bet, and the price reflects like the current market's pricing of the probability. So if yes is 50 cents and no is 50 cents, that means the collective participants in this prediction market are dead split on what is going to happen. If there's, for example, there's one kind of fun one, we'll look at some in a sec here, like will Jesus Christ return before they release GTA 6 is a fun one. And there's like a 7% chance of that happening, so better start praying. And in that case, a share of yes would cost 7 cents, and a share of no would cost 93 cents approximately. And then when the market settles, there's usually some like date. For example, this is like before the end of 2026. So if this, December 31st, end of the day, Jesus has not returned, then if you paid 7 cents to, I'm getting a little confused with my analogy here, but if you, whatever the outcome was, if you paid 7 cents to bet yes, and the outcome was no, you lose your 7 cents. If the outcome is yes, you make 93 cents per position that you buy. So the lower the probability of your bet is at the time that you make it, the more money you stand to gain. And importantly, this is peer-to-peer. This is not betting against the house or a middleman. You're betting against other market participants, fully peer-to-peer on blockchain rails. So some notes about Polymarket, which is the, I believe it's the most popular still, but Kalshi apparently just raised at a $20 billion valuation. Kalshi is a Polymarket competitor. Those are probably the two biggest prediction markets. So Polymarket has like an off-chain order book and then on-chain settlement. Whereas Hyperliquid, as we saw before, that was fully on-chain, including the order book. In this case, to keep things fast and efficient, we are using an off-chain order book, and then we're just like posting the results, essentially, the execution on-chain. So what we have is this like speed of a centralized service, but the finality of a on-chain service. So just some nuance there. There's ranges of like centralized versus decentralized in all of these products. What do the smart contracts do? So they are minting the tokens. They're holding the collateral. Like to take a bet, I have to put up USDC as collateral. They're executing the trades, as in moving tokens between people, and then the final settlement when the market resolves, paying me out or taking away my USDC, depending on how things went. And we inherit these blockchain properties still, non-custody. The protocol custodies my funds. Nobody at Polymarket ever has any control of my money. It's transparent. You can see everything on chain on these public ledgers, and it's deterministic because the code says if X, then Y. We know that to always be true. There's nobody who can ever have anything different there. There might be some issues with like resolution. Some markets have been a little messy in terms of the actual outcome. Some things are super obvious, like who won the presidential election, but some things are a little more foggy. We talked about oracles before. They're really important in prediction markets because these things are settling on chain deterministically. How do we actually know like what happened? What's our source of truth? How do we trust the source of truth? So, or blockchains don't know real world outcomes. You can't get external data inside of a blockchain. Polymarket uses UMA, which you might have heard of. And this is kind of the mechanism of how it works. There's typically no disputes, but the outcome is proposed when I think somebody has to like propose the outcome. The market resolves and somebody on chain says, okay, this happened. And then we have some kind of source of truth of whether it did or not. But if somebody disagrees with what the oracle is saying, there's this challenge window. And then you can actually say, actually, no, I don't think that is the state of reality. And oftentimes it comes down to like semantics, like not so much like did or did not the thing happen, but like there's like fine print almost because some things are like very specific, and there might be like, it technically happened, but not in the exact way it was described here. So in these cases of disputes, it goes to UMA. UMA is an optimistic oracle, meaning generally it's like, yes, this we assume optimistically that things are working as intended. Only in the case that somebody disputes are we no longer optimistic. And then UMA has this like decentralized system to try to determine the actual outcome or like resolve these disputes. And I won't dive into it too much. Like generally there's no disputes, the market resolves, anybody's in agreement about how that happened, and then the winning token is redeemable for $1. Okay. Who can use prediction markets? Technically anybody with an internet connection, but in practice there's geo-blocking. You don't need KYC, but to use Polymarket, like you have to use the front end, and then they have like a back end like matching service. When we said this, like order books off chain, so you can't really like programmatically just interact with the smart contracts. With some DeFi protocols, you can, where even if I'm in the US and US customers aren't allowed to use this service, then I can just go and use like the blockchain directly to transact with it. In this case, not really, because Polymarket is doing a lot of things on their back end that aren't on chain. So if you can actually get blocked from using a decentralized service if you live in a certain part of the world. But generally, it is open and permissionless. I think I have a nice chart here. Yeah. Okay. So here's Polymarket trading volume. I think this is also weekly. Are we good now? I don't know. No, yeah, I think it's red. That means it's dying, right? Yeah, that's what happened. I don't know how much of the presentation we lost. I open this. Sorry, guys. I was really in flow there. No, it's. Oh, I don't know how to open that thing. Okay. Yeah, green is good. Yeah. All right. Am I coming back through now? Hello. Yep. All right. Well, for anybody watching the stream live or afterwards, sorry for the silence. I don't know how much you missed there, but you got most of it. Anyway, we're about to look at Polymarket, the world's largest prediction market. Okay, let's see. What do we have trending here? The 2026 NCAA tournament winner. So we can actually speculate on that. And so you see these are like binary outcomes, yes or no. The value is almost equal to $1. And these are the, what do we have here? I think we can see, where do I see? Here we go. So total $20 million in volume on this market, which then resolves on April 4th, 2026, which is when we'll know who the winner actually is. And I can track over time the top contenders. And this is a permissionless market that anybody can participate in with asterisks. And you can see these. This is what the market thinks is going to happen. This is just purely based on like supply and demand. So there's a 19% chance that Michigan's going to win. So if I think that's wrong, I could actually buy these. I could buy these no tokens. So I would pay 82 cents to bet against this outcome. And if any other team besides Michigan wins, I get $1 for every 82 cents that I spend. And I would just need USDC in a wallet. I think they're a little more. So they have a Google sign-in actually. So a lot of apps don't even need you to have a wallet anymore. They're like abstracting that away, and I can just connect with my Google account or my email address to have USDC somehow. But then besides that, I could just participate in this market. Again, so there is like a sign up, but not really, right? Like I could just use my crypto wallet again, and again, pseudonymous. No one knows it's me. Oh, here we go. I have to agree some. All right. I read this. By trading, you agreed to the terms of use and attest you are not a U.S. person. I'm not located in the U.S. I'm not a resident of a restricted jurisdiction. So there's some limitations, right? Like if I'm U.S. or if I'm in OFAC sanctioned region, can't use this. Or at least, I don't know if they'll actually block me, but I have to confirm with them that I don't. But besides that, open information. Let's look at a couple more. I don't know, maybe there's some fun ones on here. The Bitcoin 5-minute up or down. So they have like super fast markets. It's like in the next 5 minutes, will Bitcoin go up or will Bitcoin go down? Will U.S. confirm that aliens exist? U.S. forces enter Iran. Crude oil speculation. Individual sports games. Sometimes you bet on like what somebody will say. So like during this meeting with Japan, will Trump say these words, right? So all of these markets generally should, because this already happened, they should resolve to. Yeah, you can see because of like liquidity, it's not, the yeses aren't exactly like 0, but all the nos are like 100 or $1 basically. We can see this one's in review. So if you had speculated on this, will Trump say NATO, friend, or ally 7+ times? Okay, outcome proposed. So we're in the dispute window. Remember, there's like a small window where if I disagree with this, I can actually dispute it, and then this UMA group will actually look into it. And let's see, here we're on UMA. This takes me there. Query's already been settled. Big description, right? So all this like fine print, like there's very specific things, like if he says the listed terms during his appearance, the market will go to yes. If not, it's no. Very specific things like plural and possessive forms of the listed term will count towards the resolution of the market regardless of context. Other forms will not count. there's like examples, you know, a bunch of specific things. AI generated audio or video will not count towards this market's resolution. Da, 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 da. So all this fine print is where like sometimes you can get into disagreements about the actual resolution of the market, right? Anyway, so this is what UMA's doing. It's like verifying these. And this is its own decentralized network that I can participate in if I wanted to help verify the outcomes of these. What's funny? Elon Musk number of tweets. You can bet on you know, elections in other countries. Asset prices, lots of asset prices, sports games, geopolitics. Largest company by end of March. Will it be NVIDIA or Apple or any of these guys? So NVIDIA is a clear winner here, actually, like crazy clear. Is this by end of March? So there's still time, actually. I guess it's probably the difference is so stark that it's like nearly impossible. But you can make a lot of money if this outcome was not true in like 2 weeks. You could buy, you know, for every 6 cents you put into this bet, you would win $1. That's like huge leverage if you win, but you probably won't. Oh, that's Polymarket. One more thing we're going to look at. How are we doing on time? Okay. Talk about neobanks next. So what are neobanks? Digital-only banks, typically no physical branches, mobile-first experience, that let you do all of your basic financial services that you would typically get at a bank. Examples here you might have heard of: Revolut, Cash App, Wealthsimple, Robinhood, and then importantly, these are still custodial services built on traditional financial rails. But they're a better user experience than a bank for sure. But what if we took the same concept and we built it on crypto rails? What is a crypto neobank? It's a crypto native financial service or interface for saving, earning, spending, doing all the things you want to do with your money. And these are crypto instruments, but I don't just use them for trading. It's everyday money functionality, completely on-chain, inheriting all these properties of DeFi, self-custodial, transparent, 24/7, and global, right? So why are neobanks emerging now, today? Again, I'm talking specifically about crypto neobanks. Neobanks have been around for a long time, like Questrade, a really old one. The stable coins are like achieving mass adoption. Yield products are mature. If you looked at some of the DeFi things that existed a few years ago, like they were based around like fruits and vegetables. Like actually kind of ridiculous and funny. But now the DeFi space is much more mature. These yield products are like more reliable. The yield is real. Wallet UX is improving. You saw briefly on Polymarket, I could just create an account with my Google address or my Google ID or an email or other like single sign-on methods. I don't need to custody a private key to use these applications, making it really easy. And the big one is that card and payment rails are starting to get connected to on-chain balances. So what do I want to do with my crypto? Like the dream is to just spend it to buy a coffee, right? And that's been really hard, but now these products are starting to come into existence where you can actually do that. And we can put all these things together to build some really cool applications. What do users want from a neobank? I want to hold stable assets, right? Like ideally, when I'm using a neobank, it's not like these other more speculative apps. I'm like really trying to just hold and save my money, earn a bit of interest, something modest, you know, build my nest egg. But I want to earn yield. I want to earn interest. I want to move my funds globally without all of the annoying restrictions that come with cross-border payments in traditional finance. I want to spend. I want to buy my coffee, and I want this all to come in a really simple experience with good use. I don't want to have to write down my 24-word seed phrase on a piece of paper and hope I don't lose it in a fire and all my money is gone. I don't want to have to juggle a bunch of different blockchains and tokens and apps and all of these things. I just want to log in and earn money. Super simple. What are the DeFi primitives powering neobanks under the hood? These are some of the things we talked about in the beginning. We have typically stablecoins with a unit of account. might be other assets as well, but most often stablecoins. We're going to use decentralized exchanges to swap between tokens. We're going to use bridges to move funds between chains, vaults, the savings products. We can use lending markets for borrowing, or often they're the lending side of these markets are often one of the base primitives of underscoring these vaults. Like how do vaults make money? Often from lending markets or other yield aggregators and things like that. I'll talk about smart accounts in a bit, but generally like UX abstracted, a good UX from abstraction in the wallet side, and then we want this card payment rails to spend the money in the real world. Specifically looking at cards and highlighting EtherFi is the most successful here. This is a chart on crypto card spend. So there's all these different apps that are offering crypto cards. Essentially just lets you take your crypto and somehow converts it into dollars to spend it in the real world. And you can see that this is I think this is also monthly. And we've started to reach $100 million in monthly transaction volume for crypto cards. And EtherFi is making up like half of that now. So they're doing really well. Yeah, they're making a shit ton of money off of this too. Like, it's crazy. Device printing, and this is like their main business. They started out doing, I mean, they're doing a lot of things. They were doing vaults, but now this is like the main driver. And not all of these, I would say, are neobanks. A lot of these do different things, but EtherFi is because they have this app. You go there, I deposit my money in the vault. It's earning me interest, and then I can actually spend against that balance in the world to buy my coffee. And the last thing I want to talk about and show you, I'll try to keep this quick, is Superforms. This is something that I'm working on. Starting with the problems that Superforms is aiming to solve. Fragmentation. So I haven't talked about it like too much, but we have all of these different applications. We have all these different blockchains. We have hundreds of millions of tokens now. We have all these protocols. We have all these interfaces. There's like so many things to do in crypto, and it's very fragmented. And the founders of Superform, they're actually running a $150 million DeFi fund at a place called Block Tower Capital. And they were managing this giant portfolio across like 15 different blockchains or something like that. And it was like a pain in the ass. And they said, if this is hard for us, like experienced fund managers, imagine how hard this is for the average person. So Superform is like the result of that realization that in order for the average person to use and earn yield in DeFi, it can't be this system of like elaborate doing swaps and bridges to get between chains and having to do like have my private key and sign 7 transactions to execute a simple like rebalance of my portfolio. We have things like gas. I need a gas token. If I'm using different chains have different gas tokens to pay the transaction fees. If I don't have the gas token, I can't make a transaction. Chain A and Chain B might have different gas tokens. Finding good yield opportunities is hard too, right? Like if I have 10,000 different tokens in my investment universe and I have 100 different protocols across 100 different websites and 10 different blockchains, like how do I find these opportunities? How do I efficiently move my money between them to capture the highest rate of return? All this complexity also has additional security risk, more chance of like making a mistake. I talked about rebalancing already, and then just generally this is like terrible UX, like all of this. And if you've ever tried to like use DeFi in the past, even today in some cases, like it's really difficult, and the average person, they have no chance, unfortunately. So what is Superform? Superform is the user-owned neobank. I have 2 definitions here. User-owned neobanks in both of them. One's like the marketing definition, and one is the more technical definition. So by user-owned neobank, we talked about a crypto neobank. User-owned just being the sense that there's a governance and utility token that aligns participants within the system economically, so that number one, everybody is incentivized to keep the system performing in the way it should, and Number two, if you own this token, you have some say in certain like protocol parameters. You can control the amount of fees, where the fees go, allocations of investment strategies, things like that. So it's like own your bank is kind of the idea. The two definitions, first one is from the media kit. Anyone can save, swap, send, and earn on chain while keeping full control of your assets. Talked about that already. That's just, I can do everything I want to do with my money, and I can do so while keeping control of my money, not having someone else. Or on the technical side, Superform is enabling single signature execution of arbitrary actions across chains and optimized vaults. Kind of talked about that here, multi-step transactions, all this complexity, blah, blah, blah. What if we could do all of this in one single, with one single signature? And I can do anything. I can do any action or any combination of actions, multiple things across chains, any arbitrary, meaning literally anything, with one signature, and then taking that functionality and putting it inside of a vault is the general idea. So, oh no, please go ahead.
What's their philosophy with verifying identity in that case?
Verifying identity. As much as possible, no need to do. So, Superform today does not require any KYC or anything like that. When it begins to implement, okay, there's one surface where it requires KYC. If you're onboarding via Coinbase, then Coinbase has my KYC already. So Superform will never KYC you, but to use some third-party service like an on-ramp or an off-ramp, in that case, then you would have to provide your identity not to Superform, but to the third party that's handling. Does that make sense? The philosophy being, we believe in the decentralized ethos, and we don't want your identity like extra burden on us. Have to store that data. Here is the different components of Superform. Essentially, there's like three products, if you will. The protocol is like the decentralized service on chain, which is split up into Superform Core and the Superform Periphery. Superform Core is the main engine that handles like that thing that I said. I can do any arbitrary action across chains or bundle of actions across chains with one single transaction, we'll call it for simplicity. And Superform Core is the mechanism that lets you do that. And then Periphery is products built on top of that mechanism. So the super vaults are an example, and these are these yield optimizers. These are these vault products that you put your money in. It's going to set and forget strategy. The vault manager, which could be an individual or an AI agent even, will take your money and everyone else's money and invest it and try to earn you a return. And that is built on Superform Core, so they can do anything across chains with some restrictions that we'll get into in a bit. Superform app is like the user-facing interface. User-facing interface, but the UI. To interact with the protocol, you use the app, and there's a mobile app and a web app. And then the Super Bundler. I won't dive too much into bundlers. Me and Andrew actually did a fun talk a little while ago about account abstraction and bundlers and all that. But essentially, we run our own service that takes a user intent. So it's like I have token A on chain A, and I want to deposit into vault B on chain B, put it simply. And to do that, I might have to swap tokens on chain A and then bridge them to chain B and then swap them on chain B and then deposit and reverse the whole process when I want to withdraw. Maybe after I deposit, I want to take that and like reinvest it somewhere else or add like insurance to my position. Maybe I have multiple tokens on different chains. I want to use all these tokens to fund the deposit. Could be anything. But my intent is I want to go from chain A, deposit on chain B, right? So what the Super Bundler would do is take that intent and convert it into these individual actions that it will then get your, we'll talk about smart accounts in a sec, but it'll get your smart account to execute it for you. And I just do one signature and the entire thing executes. And the Super Bundler is what's like constructing my bundle of actions that I'm doing across chain. Some more like kind of technical language, but Superform Core. So it's the contracts are persistent and non-upgradable or immutable. Basically, that just means like we have this logic on chain that does something, and you can never change that. There's like some parameters that can be changed, but generally the logic is never able to be changed. This is just a persistent set of contracts that anybody can interact with forever, that will always perform it will always execute in the same way. If X, then Y, or simply. And it compresses arbitrary actions into a single signature. We use smart accounts, and hooks are two of the main mechanisms that make Superform work. So what is a smart account? So a smart account is a contract. It's a smart contract that is used to help you do more advanced actions more simply within DeFi. As opposed to a smart account, you might have an EOA or an externally owned account. That's just like your typical wallet address. And you're very limited in what you can do. We're talking about all these multi-step transactions. With an EOA, you have to do them one at a time, one signature each time. I need the gas. It's a pain in the ass. With a smart account, I can just use my wallet as like to give the smart account permission to do things with my assets. And then I get all these things. I can get gas abstraction, so I can pay gas in stable coins, or somebody else can pay the gas for me. We have like social login, so I can actually create a wallet with my Google account, and I can use my Google account as a signer. I don't even need a private key. And importantly, this is still self-custodial, so nobody ever has control of my money. I'm kind of delegating permissions to this contract because the contract can do more things than my wallet on its own.
You used the Blondie rhyme, gas and pain in the ass.
Yeah, that was
From Heart
not
of Glass.
intentional, but I'm a poet and I didn't even know it. Question in the back. So, yeah, do you mind just like talking in the mic? We can pick it up. Yeah. Sorry, go ahead.
Sorry, I was asking, is it similar to things that EIL is, foundation, EIL for fast chain transactions, all by users are by the users. Ethereum in
Yeah, like
layer.
yeah.
Ethereum intro layer, yeah.
It's. I mean, Ethereum has done a lot of things on like account abstraction and smart accounts generally, but the Ethereum interoperability interop layer. Let's see. Ethereum unveils new technical. When did this come out? Yeah, so it is. Yeah, so it is similar. You can see here it's like built on the thought in the description.
Actually, like have the same account abstraction, but it's not like OIF that you send your like your intention to off-chain entities to all of these wallets.
Yeah.
I don't know. The main question for me is that are you doing that OIF thing for your?
So no, we do have this off-chain entity that is the super bundler. So yeah, so it's not the same as this. I actually haven't looked at this too much, but it is similar. So it's built on ERC 4337, which is the original like account abstraction standard. We use similar technology, but yeah, there is a service that our team currently runs. Eventually, we're hoping to decentralize it as well, so that anybody can run a super bundler, and then it's not reliant on one team. But yeah, there's some off-chain service that's doing the bundling of transactions. Good question. The next thing is hooks. So how do we make sure that we can, if the protocol is permissionless, immutable, if the protocol is immutable and persistent, and it can never be changed, how do we make sure that it's also like future-proof and extensible? And this is with hooks. You might have heard of hooks. Looking at like Uniswap v4 was kind of the first to popularize them. Essentially, it's just another contract that extends the functionality of the main protocol. And with Superform, every action is a hook. So a bridge you have a bridge hook, a swap hook, a deposit hook, a lend hook, a borrow hook, a whatever hook. The super bundler, when it's constructing all these transactions, each like action it's adding to that bundle is a hook. And hooks can be added to the protocol after the fact. In fact, eventually it'll be fully permissionless to write a hook and add it to Superform. And that's another thing, going back to the user-owned neobank, token holders actually control the registry of allowed hooks and yield sources within Superform. So if some new DeFi protocol comes out that is not standardized and doesn't like fit in with the existing architecture, anybody can write a hook that enables the Superform protocol to interact with that new protocol or new strategy or whatever. So this makes it like infinitely flexible, and Superform will never need like a new version because someone can just write a hook, and then you can always increase the functionality of what you can do with Superform. Merkle trees are kind of fun. So without getting into it too much, it's just a cryptographic data structure that lets Superform verify a lot of data and put it on chain so it's transparent. So what you have in Superform, you have two Merkle trees, or two types of Merkle trees. You have one global like allow list, imagine, of hooks and of yield sources. So throughout the entire Superform protocol, governance controls what the protocol can do and what types of like strategies it can invest in. And then I'll talk about the vaults in a second, but each vault has its own Merkle tree or allow list. So the vault takes some subset of the global allow list or Merkle tree, and then that's like the limitation of what the vault can do, which is important for the security of it that we'll talk about in a second. But basically, you have this giant data structure that is like, here's the entirety of what the vault or what the protocol can do. And then we actually are able to put that on chain. We can condense it into a root hash, and that's posted on chain. And anybody can go in and verify what is and is not allowed within Superform or within a particular vault. And we do that trustlessly on chain. And I talked about the super bundler already. We won't dive into it too much, but this is what allows you to do one-click actions with your smart accounts. And then I think the last thing here is the super vaults. So these are our own like vault primitive that we created. All vaults or all modern vaults have this kind of simplified access through a singular product. They're non-custodial again. Non-custodial in the sense that like nobody can ever take my money from me. Like if I put my money in the vault, only I can ever withdraw it. But the vault manager can do really stupid shit with your money and invest it into things that go to zero. So it's non-custodial, but you're still trusting somebody to manage your funds for you. And it's composable, and it's transparent, and it's on-chain, and it's permissionless and open, and all these things. Super vaults, there's kind of unique features. Permissionless creation, so eventually anybody will be able to create their own vault using the Superform infrastructure. Because of the hooks, they can do anything, infinitely flexible. We have that Merkle validation that I talked about. So this is important at the vault level. A lot of vaults today, they're kind of like black boxes or glorified multi-sigs. And I give my money to the vault manager, and they can do anything with my money. And generally, they're trying to make money, but often they're really stupid. And they'll put my money in some strategy that goes to zero or incurs bad debt, or they'll do some stupid execution. The yield optimizer, they had like a slippage issue that occurred in their strategy that lost like $3 million for the strategy because they tried to swap through a route that had like really low liquidity. Or there might be some vault you're invested in that has even Superform has been deposited in vaults that like had a liquidity crunch. So there's not enough liquidity in the vault to service withdrawals. These types of things happen. So because you can do anything with the money in the vault, we have this like Merkle validation. So again, the vault has a Merkle tree that describes everything the vault manager is allowed to do with your money. And whenever the vault attempts to take some action, it's going to take that action and verify it against that root hash that's posted on chain, the Merkle tree. And if the root hash, we can reverse engineer that to see what is allowed in the vault. And if the vault's trying to do something it's not allowed to do, it'll revert. So this way I can transparently see on chain what the vault's allowed to do with my money and what it's not allowed to do. And if any point you want to change what the vault can do, there's a 7-day delay. And I can then go in and say, okay, I don't like the changes to this vault. I'm going to withdraw my money. So through that, we have security and transparency. And then there's automated emergency controls built into like the dashboard to like shut down strategies that are having some issue or I won't dive into it too much, but we have all of these things in place. We think it's like a superior vault product. That's the end of the talk. I was going to give a little demo of the app, but it's already 8 o'clock, so I'll probably just stop there. If you want, you can download the Superform app or follow me on X. It's limited geography now, so this is the mobile app, but it does work in Canada. If you deposit, I think, $5 and hold it for like a couple months, you could win a gold bar. There's a campaign going on. The current version of the mobile app is a little outdated because anyone who's tried to develop an app before and to have it on the App Store should know it's like a giant fight with Apple. Took us like so long. We had to get a lawyer involved to like get the damn thing on the App Store in the first place. And then we have like a big pending update with a bunch of new stuff, but it's not currently there on that link, but it will be live soon. I think Apple finally got back to us. There's also a web app. That's at superform.xyz. And if you create an account with your Google sign-in or email, you can actually access the same funds between the two of them. While I have your attention, I'll just show you for 2 seconds.
One question.
Yeah.
What kind of chains you have on Superform? Is every EVM chain?
Not every EVM chain. We were going to do a large push, but most chains, honestly, are garbage. And if there's once the incentives dry up, everybody leaves. So we're on like the most popular EVM chains. You could argue like we were looking at like Monad and Mega ETH, but what we're doing now is purely based on like curator demand. So the main push for the reason why we finally got on Hyperliquid was because we're going to work with a curator who wants to build a super vault on Hyperliquid. So going forward, all of our decisions around like what chains we deploy on, what hooks we build are purely based on what our curators are looking for. Anything we don't have that they want, we'll build us in. But that's the current list of chains. The way this works, these are our super vaults. These are the ones we curate in-house. We just have like a few on Ethereum, a few on Base, then you can stake our token as well. But eventually we'll have third-party curated vaults as well. I think I'm signed in here. Yeah, you can see my portfolio. We kind of separate it into earning assets and idle assets, with the goal being ideally you want to always be earning. And we also have this like market page which has like 1,000 different vault opportunities. Like I could just scroll forever. I can sort by chain or by asset or by the provider. Like I want to see all the Aave vaults on Arbitrum. So I can do that.
For example, right now, what is your best API on Stable?
I hope it's Superform, but it might not be. So I can actually sort by APY, and I can say all stable coins. And it looks like that, well, there's no money in this vault. Look at this one. But this, I don't know what the hell this is, but Frontier Yala USDC is paying 70% right now. Hang on, let's see. With 3 million TVL, that's pretty good. I wonder, do I have the link here? I do. Is this real? Yeah. We like Euler. Okay, this is an unverified vault. I should probably remove it from Superform. But yeah, you can see there's somehow, oh, it's because it's at 100% utilization. So the way these markets work is you have this this point here where like basically utilization is how much of the lended assets are currently borrowed. In this case, there's zero liquidity in the vault. So there is $3.26 million deposited in the vault and also $3.26 million borrowed from the vault. So we're at 100% utilization. And that's why the APY is so high. So there's kind of this like pretty flat curve here. And as the utilization increases, the APY increases. But then we have this kink. And once we get past typically 90%, the APY explodes. And this is because we want it to be expensive to borrow, and we want it to be very lucrative to lend because we're trying to bring the market back into balance. So when you're approaching 90% utilization, now we have this issue of like illiquidity. If I want to withdraw, I can't because there's not enough liquidity in the vault. So we try to increase the APY for both borrowers and suppliers to try to bring the market down. But this is deprecated. So I'm going to remember to remove this vault. I don't want anybody to deposit into this. But that's that's their highest APY on Superform right. Yeah. And just the last thing I'll show you is an example of a transaction. So say I, hang on, let me go into a different wallet that has a little more money so I can do a little more stuff. So I'm signing with my Google account, first of all. I created an account with Google. I could also take the same Google account and sign in on my phone and access the same funds here, confirm transactions with my face. And say I want to deposit, let's see, what do I have in my portfolio here to show you what I can do? Well, I do like a rebalance transaction. Okay, so I have this Felix Hype. So this is like a Hype vault on Hyper EVM from Morpho. And I have, okay, why can't I do, oh, because these are super vaults. And I have this, let's just, I don't know if this will work, but I'll try. I have this Aave vault, USDT vault on Polygon. Okay, so this is like two different chains, two different assets, two different protocols. And I'm going to try to put these both into a Ethereum vault on Base. See if this works. It might not because I only have 3 cents here. It might try to do something weird on like the routing, but so right now the bundler is trying to construct the transaction and seeing if there's a route between all of these assets. Yeah, okay, it doesn't find a route. Again, because often if you're trying to bridge like 3 USDT between chains, it's going to give you an issue. But if I just tried this one, here. Yep. Boom. Okay. Here's my fees. It'll cost me 3 cents. Routing fee. And boom, that's done. All right. So that was like there's like multiple swaps, a bridge, and a withdrawal and a deposit all happening, and I just did this with 2 clicks from my Google account. Pretty cool. And the next things we'll be adding is like better on-ramping. So if I want to add funds, I can send from a crypto address or I can send from Coinbase. But we'll add more on-ramps, from like Apple Pay and things like that, off-ramps, and then a card, importantly. So from the mobile app, you can, we'll actually have this like credit line you can open against your yield-bearing assets, and then you can spend that in the real world. So that's kind of the next step for us. Anyway, that's everything. Any questions? I know we're like pretty late here, but answer a couple of questions. Yes, man, a mic, please.
Can you talk a little bit about ERC 3643 and the impact it's going to have on DeFi?
3643? Token standard for, I'm not familiar with this one. The token standard for RWA tokenization, open source suite of smart contracts. Okay, so I think the main thing here is this. So oftentimes we'll have some asset that we don't want everybody to be able to own. So what instead we have is some system where I can make sure that only certain addresses are like allowed to hold a token, right? I don't know exactly how this works, but that's the general idea. Because you might have, there's going to be like institutional only assets often, or certain institutional only like protocols or investment products that I don't want the entire world to have access to for some reason or other. And so this seems to be a protocol for standardizing that experience and having these like permissioned tokens on permissionless networks. That I'm not sure how it like relates to the broader picture.
I don't know much about it. I've heard of it, and I wanted to know if you know more, and you know.
Yeah, I haven't looked into it, but I know that that is a problem. There's some like let's see, Coinbase has some kind of like authentication service. I can't remember what it's called. Like there was like a vault on Morpho, I remember, that you could only deposit into if you had, it was Coinbase attestation, it was called. Basically, Coinbase kind of like KYCs your wallet, and then that wallet is now allowed to deposit into certain vaults. And I can say you can only deposit into this vault, or I can only hold this token if you have Coinbase attestation. And this seems like a more on-chain way of doing it. So yeah, see, it's built like decentralized, on-chain. So it kind of does that thing that Coinbase does, but is done in a decentralized way. So I think the main use of this is going to be for like more like institutions and things, for more like compliant institutional products on chain, and the framework to like design those products in a way that's like compliant with these institutions, but not forsaking the properties of DeFi that we love.
Okay, thank you.
Anybody else?
Any final questions?
All right.
All right, sweet.
Thank you,
Okay.
everybody.
Round of applause for Christian. All right. Sweet. Thanks, everybody, for coming out. Remember to mint your PO app. Who's got the PO app downloaded? I don't see that many hands, so I highly recommend going to poapp.xyz, download the app, and then just scan location. So you're looking for the POAP Home app. That's what you're after. Download that, and then you can mint. There's 2 POAPs to mint. One that says you've been here at Decontrol, and the other one that says you were here for this meetup. So recommend getting both of those. Do it now. And yeah. But POAP. POAP. There it is. POAP.xyz. And then just scan once you get it in there, and you need a wallet and all these other funny things. Or you can put your email in, I think, too. I hope so. Yeah, the 2 people hopefully did. That finally did it. But anyway, okay. 4 claimers. Let's go. All righty, everybody. We'll see. Nice. Okay. Thanks, everybody, for coming out. Once you get your POAPs minted, just fold up your chairs and feel free to stick around for a bit. Good night.